Good morning, everyone. Welcome to RadioSilentPlay.com. I am your moderator for today on Friday, October 2nd, 2015. Let me start off by saying I am not a financial advisor. Please do your own due diligence before trading any stock or options. Trading stocks and options require lots of risk. Okay, so I'm going to start off with the SPY. Currently, the SPY is trading at that 193 level right now. The futures are trading higher. With that said, okay, as I mentioned, we are looking at the 21 and 8-day moving average as resistance. So any move up, okay, any move up testing that 194.80 level will be a shorting opportunity. Now, this is something that I want to ensure that traders understand. Today we have the non-farm payrolls. All right, non-farm payrolls is going to be significant because you may see a spike in this channel. But if we have a spike in channel, okay, this is range bound. We are still in a bearish flag. So any move up to these levels, okay, is going to be a shorting opportunity. And why do I say that? If you notice here, we're forming what you call a head and shoulders. We have this left shoulder, head, and now your right shoulder. Now, the markets did close significantly bullish. With that said, I'm looking for a fake out breakout around this 195 level. Okay, so move your levels up a bit to 193 to 194.80. Okay, and then we're gonna look for that 195.50 to 197.50. Now you can move your stop close above this 197.50 level. Okay, for traders that want to take on a little bit more risk, okay, you want to move your stop close above 197.50 to complete, okay, this head and shoulders. What we're looking for is the potential gap fill here, okay, this gap fill here that we're seeing, and that's a potential move to that 194.96 level. So what I want traders to kind of keep an eye on, okay, since we're trading a little bit higher, I want traders to be patient, but at the same time, look for that 193 level to 194.80 level to start accumulating. Okay, we're gonna look at the November, okay, contracts. Look for November 15 to November 20 contracts, and whatever triggers I will send out. Okay, that's something that I want traders to kind of look at. Now, the weaker market right now is the IWM. Okay, any move back to this 114 level will be a shorting opportunity, okay, with a stop close above 116. So what I'm looking here is that 8-day moving average at 114.15 level, okay. Now I'm going to come back and I'm going to show you a different time range because this is the weekly channel. You still are trading under that trend line, okay. I'm going to go over the daily chart, and what you're noticing here, okay, is a good, okay, bottom. Okay, this, what you're noticing is you're starting to form this bear flag level. Okay, so this bear flag, what I'm looking for is that 113 to 114 level will be a shorting range. So watch that 113, 114 level for a shorting range with a stop close above right here, this 116 level. Okay, so we're looking at the range here, range bound 113 to 114 for a short on the IWM. Okay, so they did reverse split shares on the TZA, so it's not trading in the 10-11 range. Now it's trading in the high 40 ranges. So I want traders to kind of keep an eye on the IWM for that shorting opportunity. You can actually add the TZA long if it pulls back down to 48. Now I'm going to show you guys that, you know, they actually reverse split here on the TZA. Before it was $10-11 range. Now you're trading at that 53 range. What we're looking at here now, since they reverse split, you're looking at that 48 level. Okay, so IWM range bound 113 to 114 on a fake out breakout, and we're gonna move our stop close right here at this gap fill, and this is right here at that 116 level. So this 116, a close above 116 on 2 consecutive closes, that will be your stop out, but you're still forming a bear flag. So out of the major markets out of the Qs, the Nasdaq 100, the SPY, the IWM is the weakest of the markets. So we're looking for any move back to that 113, 114 level. We're going to look to short the IWM again. Okay, I do feel that we are going to roll over here on the weekly chart. Okay, now I'm going to move on to a trade that I feel very, very confident on, and I'm going to explain to you why. Okay, right now I know this is an ugly chart. I know a lot of people are panicking. We just got word from Bank of America that they downgraded this and they're looking at a target at $8 here on US Steel. Okay, now US Steel, our ticker symbol X, is a stock that I feel is going to bring a big opportunity for RSP traders. Okay, and here's why. Okay, if you notice here, I posted this trend line here. Okay, this is on a weekly chart, and if you notice, you are in a significant downtrend. But with that said, every time you kiss this level, okay, you see the market bounce. You kissed it here back in September time in 2014. You kind of kissed this level here in January, okay, 2015, and then you had a market bounce. You tried to rip above that level. You kind of broke down, okay, and now what you're noticing is you're kind of kissing this $10, which I call the mental support. Okay, if RSP traders understand probability trades, we always trade, whether it's an OTC, whether it's a small cap, we like that these levels from 9 to 11 range. Okay, if you notice, okay, this stock, okay, or this company used to trade here at that $16.50 range, and now we're at that 5061.8% retrace down here at that $9 range. This $9 range is a great opportunity to start adding a position, whether you're buying actual stock, okay, for dividends, or you're actually buying options. What I'm looking for is 3 to 4 months out. I'm looking at January calls, and these are about to trigger. Now, let me explain to you why I think this is going to rally. If you notice, okay, this is U.S. Steel Corporation's net sales from 2006 to 2014. Okay, if you notice, okay, this is a viable company. Okay, this is millions, net sales in millions in US dollars. If you notice here, you had 15.715, 15 million, you had 16 million, then you had 23 million. Okay, for the most part, okay, this is a billion-dollar company. If you look here, the Pennsylvania-based integrated steel producer generated around 11 billion US dollars in revenue. Okay, so this is a company that I do not foresee it going any lower. Okay, during a downturn, if you understand what the market conditions right now, okay, we are in a significant precipice of where the market is going to move. Okay, but at the same time, okay, any downturn on this market, I do expect, okay, steel to kind of bounce from these levels. Now, geopolitically, what we're seeing is, okay, we have a lot of tensions in the Middle East. Any mention of any issues integrating the U.S. to have to kind of send military personnel or military equipment, it's going to cause U.S. Steel to kind of move higher. So I want traders to understand that sentiment. Fundamentally wise, okay, this is a sound company. Okay, yes, we do have slowdown in China. Okay, and this has a lot to do with why, you know, X is kind of trading lower. But with that said, okay, we're looking at the markets, and now this is something that traders have to understand is every time you hit a certain level, you have a bounce. Now, most importantly, okay, I want you guys to kind of look at this chart. Okay, this chart is the chart on steel. Okay, this is a steel monthly chart from back here from all the way down to 1996. If you notice here, okay, we're right here at the double bottom here. Okay, double bottom here is the level 1012. Okay, so we're kind of kissing this 1012 double bottom, and right now we're trading at 990. So you're talking about pretty much the bottom that we had here in 2003. We're actually testing it now at $10, and we're trading at 9.91. Okay, so since that time you haven't seen, okay, a significant bounce. Now if you look here, okay, we were trading at 13.70. The market bounced and hit a high of $70. Okay, so I want traders to kind of keep that in mind. When this was trading, okay, back here at $10 range, we saw a high of $194. Okay, so this is going to be a big opportunity for people to start investing in steel. And why do I say that? I'm a firm believer and a contrarian when it comes to buying stock. I buy stocks when they're hated, and right now, with Bank of America stating that this is going down to $8, there's a lot of panic involved in this market. Okay, if you notice here, we're actually oversold and we're approaching a pincher play. Okay, I would not be surprised, okay, for X to kind of start filling in these gaps. If you look here on X on the daily chart, okay, you have a pincher set up here, setting up, okay, and on top of that, you have a gap fill here at that $12, close to $13 range, and another gap fill here at that $17 range. So I want traders to keep an eye on X. Any pullback here, any pullback down to this $9 range is going to be a great opportunity. If you see here, we're oversold. And what I see clearly is that this company is a $11 billion company. And on top of that, you're right here and you're testing this this double bottom here from 2003. Okay. And if you notice here, you had a huge move at 190 level here. So there's a lot of room for a huge trade on the X. Okay, so any questions on the setup, just send me an email on radiosilentplay@gmail.com. If you want to join for a free membership for 30 days, just go on www.radiosilentplay.com. And again, I think that the X is a great opportunity here. You're talking about a stock that used to trade in the hundreds, okay, and this year alone you should be trading at $27, $28, and you're kind of trading down here at $9 to $10, $11 probability trade. So this is a stock that I either buy stock and hold it for a longer term and start accumulating, or buying the options down to December, January, February. Okay, I'm actually looking at the January 15, okay, $12 calls. Okay, so with that said, good luck everyone, and be patient. Ensure that if you are buying this, scale in. And what I like about it is that you have upside here to about $16. Okay, so that's about 50 to 60% probability trade here for a 10 to 20% risk assessment, and I like that ratio. All right, take care everyone.